A very good evening again to all our participants. This is our usual weekend session. In these sessions, we take a look at the markets, what happened last week from a weekly as well as from a daily charts perspective, and position ourselves. What are the evidences on the charts, and based on that, how should we position ourselves for the next week and what should be our strategies, right? I have the Nifty weekly and the daily time frame in front of me with the Japanese candlesticks on the top, the Heikin-Ashi as my main frame. Things are not looking that good. I generally prefer to use one or two words to express the market's emotion at that point of time. And I would say I will use struggle. I would say on a present continuous basis, struggling, right? So taking a look at the weekly chart, you can see I will first, highlight towards the Japanese candlesticks because it will give us an understanding about the close of the week, which is almost at the lowest point of the week. So not a very good close from the Nifty spot. And it has come extremely close, if not inched little, to the previous lowest point, which was this one. Now it's slightly higher than that this week, but overall things are not looking that good from the actual price or the modified price. If I consider the Heikin-Ashi, we've been in a down momentum, in a downtrend for quite some time. Yes, we had momentarily a decent bounce back, which gave us a little bit of a hope of that 445 points one day gain from the Nifty last week. But that's gone. That's gone. So upsides, or should I say bounce backs, are not sustaining. The flow stays on the downside. No respite from the dollar. The dollar continues to show strength. The crude started to rally. So overall, it's not shaping up as a good situation for the overall markets. So the bearish sentiment, I will not call it a bear market, but the selling sentiment continues, and it seems like the market is heading further down. Momentum is a leading indicator. So if there is any sign of a reversal, ideally 9 out of 10 times the momentum indicator or indicators should give us such a leading indication. Is it there on the weekly charts? Sadly, no, not yet. I always suggest that if you find a chart which is down and is not giving us any signs of a bounce back, and all of a sudden it's a V recovery, things like this happens, then the bare minimum threshold, one level beyond which you will start to reverse your view, should be the previous bar's high. The bare minimum bullish criteria is higher high, higher low. You'll agree with me. So if you see the markets turning around on a dime, then at least last week's high it should cross. And this is applicable for all the weeks going forward in the future. So things are not that great from the weekly point of view. If I come and take a look at the daily point of view, it's also not that great, of course. Maybe I don't have confirmed indications, but maybe a bit of a short-term divergences may shape up. I will wait for confirmations from the Heikins, but to sum it up in short, trend is down, momentum is weak, upsides are not sustaining. This market is still in a, let's say, downtrending, weakish zone. Are there any signs of an upside expectation? Sadly, at this juncture, no. CNX 500, moving on to the next. The broader markets, very, very similar picture. Mid cap and small caps, this is where the party was, and this is where it has sold off quite heavily. In fact, Friday's trade was around 2% and 2.5% for this small cap. And their weekly charts are weakening pretty fast. So not good. Even the broader markets have now picked up with the weakness. You'll remember that Earlier, we used to see small and mid caps holding the markets or trying to hold the market well, wherein we did see corrections slow down from Nifty 50 large caps, something like a Tata Motors, something like a Reliance Industries. Didn't you notice Reliance coming down for multi-weeks, multi-month now, and the mid cap was showing extremely bullish signs. So that seems to be now getting in line with the overall markets. The most important sector which enjoys the maximum weightage is the Bank Nifty. Now, this is not a good sign by any mean. It's a strong sell-off, close almost at the lowest point of the day. It's come off a very important zone of support which held the index for quite some time. Now, I will not consider this as a head and shoulder top. Doesn't look that clean with the right shoulder almost as high as the head. Doesn't look that clean, but nevertheless, it seems like it was distributing within this zone and it has now just started to give us a breakdown. Generally, these kind of range breakdowns, when they happen, they are, it's a common thing to bounce back and then open up again on the downside. Let me draw the bearish picture first. If we see some kind of a relief bounce back sometime soon, if the Bank Nifty attempts a retest of 50K, and if after that it slips and breaks this low, I would suggest to forget the Bank Nifty and the Indian equity markets for a couple of months at least, because the follow through leg, again, most of the time is very, very severe on the downside. If this happens, then we might start to see some negative news event, maybe from a global perspective, happening at that leg. If, it's all if, I'm just trying to figure out what may happen. At the current juncture, what we see right in front of us, not good, not good. Again, I'll ask the same question to the charts. Is there any sign of divergences or positivity of a selling slowdown? No, the daily chart, the weekly chart does not suggest me. We can go one notch higher and evaluate the monthly chart, but we'll do that end of the month. It will make more sense. The monthly chart will be predominantly a pretty strong one across all the sectoral indices also, but we will take a look at it later, end of Jan. As of now, the Bank Nifty also pretty weak. With the Bank Nifty, we would like to take a look at the finance. Nothing stands out here, very, very similar chart. Private banks will also look very similar to the Bank Nifty, and this is where it's more or less identical. But let's see what's happening in the PSU Bank. The PSU Bank, if you remember, did give us a promising bounce back, and that has only led to a follow-through move again back to those lows. So no, PSU Bank as well as private sector banks across the board is participative on the downside. This brings me to the point. If you remember last weekend when we caught up for our weekend session, we did mention this categorically, very clearly, that it seems like if the market breaks down or if the market cannot sustain, we might see weakness from the banks and financials, especially banking stocks and the metals. Remember? So it's good to see that the market is playing out to the anticipated script that we had kind of analyzed 7 days back. What's the next most important sector? After the banks and financial comes IT. Strong weekly chart structurally, not that great in terms of the momentum. It's slowing down. It has, it has been recently particularly choppy. When I say choppy, I mean fall without follow through, downside, bounces back quickly, falls again bounce back. It becomes very difficult to get into a position and wait for the position to play out. As a trader, as a speculator, you would like to position yourself, buy or short or whatever, and allow that position to play out for a few days. I'm not considering intraday traders here. But that's not kind of happened with the IT pack. It's been a bounce back which lasted for 2-3 days, a sell-off that lasted for 2-3 days, and again a gap up thanks to TCS sharp move comes the recovery. Of course, the dollar angle is a big supporting factor to this entire pack. The trend is still positive. The momentum is not. When I see this kind of a disconnect between the trend and the momentum, if you see it on the weekly chart, it will lead to volatility, choppiness on the daily chart. So if you have any IT stocks back of your mind that you're planning to trade this week, buckle up, you will see some choppiness, some volatility. Upsides will last for few bars, downsides will also last for few bars. The good thing about the IT is the structure is structurally pretty positive. I'm a little worried, and I'm going to keep a close eye on this pack primarily because of this structural negative divergence. Divergence does not lead to corrections. Divergence leads to slowdowns. It is slowing down. It has consolidating. It's been consolidating for 4 weeks now. So will it correct or not? It all depends on last week's low. As of now, by looking at the daily chart, things have improved. Direction-wise, things have improved. Momentum-wise. And with TCS leading the way with a pretty positive price impact, it will be interesting to see now what Infosys delivers, HCL Tech, Tech Mahindra, Wipro, and the other delivers, right? So we may get long and shorts both. Whatever you do, it's better to stay on the long side because of the structure. Quick trades, please. IT. Moving on to the next important one, energy. Not good. Sadly, not good. Last week, I was hopeful looking at our positive HAGB, which happened last week. I had a little glimmer of hope that will we see a move above last week's high? Will we get a move from Reliance? Oh yeah, we did get a move from Reliance, but it was not enough to move the entire pack. We did get a good move from ONGC, but again, not enough. Oil India also gave a day's move and then fell sharply the next day. But the overall pack was weak. So we need to wait. We need to wait a little bit. From the weekly time frame, things are down out. I would wait and see, wait and observe for a sign of slowdown. See, when I see the weekly candle, the close is at the lowest point of the bar. This is what you would like to call as a Maru Bozu. By the way, let me take 2 minutes extra today. By the way, this Maru Bozu also gives you what you know as a bearish engulfing. Please do not fall for this. It is not a bearish engulfing, because a bearish engulfing should form after an uptrend, not after a downtrend. Now, if I see a bearish engulfing after a downtrend, this raises my eyebrows that you're not supposed to take a shape here. How come down here? And so there is this observation called the last engulfing. I'm not too sure if you have heard about it. The last engulfing is the engulfing which marks the last sell-off or the weakness, which means this can act as a reversal pattern. This is interesting. Do they work all the time? Of course not. Thankfully not. But this coming week, just by any chance, whatever, if you see by next Friday's close, if any of the sectoral indices or any stocks, those which has formed a last engulfing on their weekly time frame, if the next week the high of that last engulfing is crossed, these are going to be your leaders towards the bounce back. याद रहेगा? ठीक है? So it's very difficult. Why? Because the close is damn down right at the lowest point, which means it has to rally a significant level to cross this high, bring in some let's say glimmer of hope for upsides, and then trend reversal, pullback, etc., etc., etc. If it was something like a small red body and a long lower shadow and a closes here, it doesn't have to travel too much for the positivity to kick in. Now for me, the positivity to kick in, it has to retrace the entire last week's fall, and that will mean a lot. Okay? So I think the ideal thing to do over here is to wait. Just wait and see how it plays out. Daily chart also selling off for last 2 days, not a very good sign. Divergences are there, but poor little divergence. What will it do if the price do not give us a bounce? Interesting. Let's move on to auto. Now this is where we did see a move. This is where we've seen a 4-5 day kind of a consolidation correction, which has led to 2 bars on my hike and on the weekly time frame, which are looking, let's say, promising. Auto, I will say, a bit promising. We can see a mild improvement of the momentum indicators. Trend indicators has not completely improved. There has been a sign of divergence. Selling did slow down. Bounce back did come. The bounce back has not sustained. So I would say, looking at the, especially looking at the weekly chart, it's kind of make or break. It requires a move above last 2 weeks high. You can very clearly see from the Japanese candlestick charts, the last 2 weeks high are more or less identical. And the last 2 weeks low is the last week's low, this one. So make or break. It's going to happen next week. Quite certain. Which way? If it's a make, it's relatively better. It will be easier to pick up those stocks because most of the stocks are weak now. Or will it be a break? But you are going to get a directional move from the auto next week. So keep an eye on the auto pack, on the auto stocks. Open the auto stocks. Check who are the ones whose earnings is coming up. The earnings can lead to an effect or not. When you do this kind of an analysis, a top-down analysis, sector first and then stocks, always start with that stock which enjoys the maximum weightage, M&M. Then go to Maruti. Then you check Tata Motors. Then you check Bajaj Auto, Hero MotoCorp, and so on and so forth. Okay? So interesting. I'm going to keep a close look at this counter, Tata Motors. So auto, make or break. It's going to give us a move. I'm quite certain about that. Which one should we check next? FMCG and consumer durables. Now, FMCG was one of the first sector to give us this correction when the other sectoral indices were still not down. Mild improvement of momentum, mild little improvement of trend. We can see, we did notice a sharp correction and a big move. This came on Thursday thanks to Hindustan Unilever, and now a cool off. Promising. From a short-term bounce back point of view, we did mention this last week, that FMCG looks like we might get some odd short-term bump ups, bounce backs. And please remember, these are bounce backs. Do not put a lot of hope and faith on them that they're going to last for multiple days. A classic example is something like what we noticed in Hindustan Unilever, a wonderful 3-4% rally. By the time it was afternoon, it cooled off, right? So trade them, right? So I would say, looking at the daily chart, clearly this is the zone which needs to be taken out. It's close to that 58K mark for the CNX FMCG on the daily time frame. This will lead to that breakout, and I'm quite certain ITC, Hindustan Unilever, Britannia, Dabur will show, Tata Consumer Durables will show some merit if this move comes. Okay, Consumer Durables was holding well, but Dixon enjoys the second maximum weightage within the consumer durables, which dragged the index down with a very sharp fall. Weekly chart has given you a big outside bar. Weekly chart has given us a breakout which has failed miserably. This is not a good sign. A breakout failure is never a good sign because a breakout failure generally leads to multi-legged fall. It's very unlikely it will just fall one leg and bounce back. Unlikely. If a breakout has failed, then any bounce back, ideally, most of the time, leads to further downsides. So consumer durables, I will avoid. It's very difficult to trade when the weekly chart has given you an outside bar of this size. So unless I have very stock specific trade setup that I have identified, or else as a pack, I would like to stay away from the consumer durables, be it a long side. In fact, if it's a short side, I will wait for a bounce back and then short it. Only applicable for derivatives trader. What are we left with? Metal, pharma and realty. Metals, we discussed this the last weekend, that banking and metals can give us this breakdown. Metals has given you that breakdown. Again, similar to most of the sectoral charts which we have discussed so far, not good weekly, not good daily. And when I say not good, most of the indicators are on the downside. Most of the indications are on the downside. There is barely any indication of selling exhaustion. Let the selling exhaustion come, then the reversal come, then probably the sentiment will improve. So, dilli dur hai. There are no contrarian readings also that I can preempt that okay, is high ke upar the sector will reverse. Sadly, wo bhi nahi hai. It's not there. It was there a bit in auto, make or break. There's a little bit of that in FMCG because FMCG has shown that merit recently. So we could figure out something in FMCG and auto, but as of now in metals, no. Pharma, tricky. And I'm not too sure if pharma will lead further weakness going forward next week or not. Interesting. It will be interesting to see. It was a sector which was participating when the market was down. But then in a bit of a hurry, it has come off most of the stocks. Take a look at Sun Pharma especially, enjoys the maximum weightage, has come off. What's there on the weekly chart? The weekly chart seems to be respecting this kind of a zone on the upside. The weekly chart last time bounced back from here. Is it going to create a range for itself? Will it cool off? This last week's range is going to be the decider for the week ahead. The close is again at the lowest point of the week. Friday's close across many stocks are at the lowest point of the day. If you track the global markets, the US markets also cooled off last Friday. So high possibility Monday we are going to see a negative opening. Maybe not a huge negative, but nevertheless negative opening. So most likely ये range नीचे के तरफ टूटेगा. So it's not looking that good for the pharma. So I would avoid pharma if I'm looking for a long trade. If you're a derivatives trader, you can look for some opportunity within that pack. And finishing off our weekly sectoral analysis with reality. Clearly, it has created a proper, well-defined ceiling and a decent, more or less a decent floor for supports. That's where it is back now. Weekly close is bad. Daily close is pretty bad. Trend momentum on the daily time frame is completely beaten down. Weekly, there was a sink of positivity, but now it's gone. So it is likely to stay choppy. It's likely to stay choppy. You might see some weakness from a couple of stocks like a DLF or let's say a Godrej Properties. And on the other side, you might see some counterbalancing gains from, let's say, something like an Oberoi or a Lodha, etc. So it's again, stock specific movements are very likely to happen here. Earnings season. So whatever stock you trade, always open the underlying chart first. Make sure you're looking at the underlying. Make sure to see where the earnings are coming out. Check the date and position yourself accordingly. Just do not go, carried away without observing or noticing, especially during an earnings season. Okay. So I'll just conclude by saying that the most of the markers and evidences on our charts are still negative. Negative markers does not necessarily mean that it's going to crash. It may or may not. There was no evidence of selling slowdown on those charts which are weak. So we cannot take a call of any bullishness right now. Only prices have to bounce back, hopefully cross above certain hurdles on the upside. The first hurdle is last week's high. Then only once the price starts to improve, can we position ourselves towards long trades. As of now, sadly, no. Keep an eye on auto. It's going to give us a move. Keep an eye on what we discussed as FMCG. Can give us a move. I'm talking from an upside point of view. Or else, as I started today's discussion by using the word struggle, the index and the overall markets are struggling. It's likely to stay. Right? So this is where we come to an end to our usual weekend sectoral analysis. Now, let me take a look at your observations, your doubts, and your questions.